Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, we're getting into it now. We're getting to Thursday. This week has been nuts. Omni has been calling this direction very well. Omni has been flipping red, green, right? Well, let's start it this way. Green, red, green, red, green, red. Yesterday, we were looking for the upside. Today, and we did. Basically, we went up all day. In the last 20 minutes of the day, they hit them back down, right? Tonight, the Omni flips to red, and it wants to go short. It wants to wait for a rally and now take the short side. So while we are at this very indecisive area where the U.S. stock market and I guess many other world indices are trying to figure out what direction they want to go in next, our Omni's flipping back and forth while it is waiting for the indices to make up their minds. But it has been working, traders. It's been all good. The Omni now is looking for downside in the S&P. We have a trade set up at the site. Also, Euro currency. We have a buy rec in the Euro currency at our site. The site is www.livewithoscar.com. If you go to that site, you will see we have a rec there for S&P and the recommendation in Euro currency. S&P, we expect at least to start off going down. And Euro currency, we're expecting that bad boy to go up a little bit, which means the dollar likely is going to go down. Let's see what happens. All right, traders. The, I guess, theme of tonight's video, which is being shot on Wednesday night for Thursday's trading 04-2309, the theme is the swing day, baby. We got a swing day in the S&P. A swing day looks a lot like this day right here. You have a day that opens up, runs up, and then the next day the market opens, it runs all the way up, puts in a new high, turns around and drops and settles by the low. That is considered a swing day. How do we handle swing days, traders? This is what we do, and my Omniacs have learned this lesson many times over, so we will put this rule to use. The swing day, when the market opens the day after the swing day, when it rallies up and gets just about as high as the day before, you sell into it there and expect the market to drop down. Your stop needs to go somewhere up here. You sell it about even with the day before and expect the market to come off. That is how you handle a swing day. I would like to show you a couple of charts right now. One of them is in the S&P. The other is in Euro currency. Traders, let's go to the charts. Okay, traders, what you are looking at before your eyes is the June S&P daily bar chart. Each one of these lines represents a full day's movement in the S&P. This day right here is considered a swing day. Swing days need to be traded as a swing day every time you see one. The odds are in your favor over time if you always treat the swing day in the same manner when you see one. If you see a swing day, treat it the same. Here's your swing day. The market had a day like this. This one up here is the swing day. Tomorrow or tonight, if it happens, we want to sell it right about here and expect a drop. We are selling it basically even with the highs of the day before the swing day. Traders, it works very well. It happened on many, many charts, many occasions. There's one right here, traders. Look at this little swing day setup. I don't know if I just ran over the bar right here, but you had a bar that went up, came back down. This high right here is about the same as this high, and down it went that day. Well, now we have another swing day setup. It looks very much the same. Traders, indicators are bearish. There is a swing day here. This market has been up one day, down the next, so we are not falling in love with this trade. We are just taking it one day at a time. Pull your own charts on the S&P and tell me what you think. Okay, traders, the next chart before your eyes in this video is the Euro currency daily bar. And I have to say that this sure does look like a flag to me, traders. Here's your flagpole, and here's your flag. That, to me, looks like a flag, and if it's right, it should break out on the upside. meaning that the dollar should get weak if the euro currency is going to get stronger. Here's your flag, Paul. Here's your flag. Basically, that is a bullish look. You can see that we just bounced off the bottom of the flag, of course, and just got above one of our averages we like to use at the Emini Trading Academy. In fact, this average, it has behaved very well around this average recently, and we decided we would use it tonight. So you have the flag, you have bullish indicators. In the dollar index, you have the opposite looking flag plus a head and shoulders topping looking action in the dollar index, and the dollar index looks bearish with bearish indicators. So if the indicators are bullish here and bearish in the dollar index, the likelihood is they may sell some dollars and buy some euro currency. Pull your own charts on the euro currency, see if you can recognize this flag, do your own homework, traders, and we'll compare notes at the site. Okay, traders, so you've seen those charts. You see the flag, right? That is a classic looking flag with a little bit of a boost. Euro currency could have a rally here. Also, you've seen that S&P chart. Traders, a swing day is a swing day is a swing day. You handle the swing day the same way every time you see it. And over time, I assure you, the odds are in your favor. You see a swing day, whether it's a buy or sell swing day, treat it the same every time you see it. I hope that rule will help you, and I hope that trade works. Traders, never ever accept anybody's recommendation without doing your own homework first. Make sure you agree with the direction and where the trader who's giving the recommendation wants to get in or out before you accept the trade. And remember, once you decide to take the trade, it is you who pulled the trigger. It is your trade, win, lose, or draw. You need to look in the mirror the next day or that evening and decide whether you like yourself or not. So do your homework so that no matter what happens, you don't look in the mirror and go, it wasn't my trade, I took someone's advice. Do your homework, make sure that it only matches your own homework before you take that advice. All right, traders, I am broadcasting to you live from my New York City office. One more night in New York City, baby. You're going to love it here. All right, traders, Mandalay Bay Trade Show, May 11th, 12th, 13th, and 14th. Yeah, baby, at the Mandalay Bay. Traders, make sure you come on down and meet me. I'm doing the trade show. I got a booth at the exchange, and I am doing a speaking engagement on Thursday, center stage. Make sure you're there. Thursday's date is the 14th. Traders, if you're going to show up to the money show, I'd love to know who's coming so I can prepare for you. Please shoot us out an email at rsvpmoneyshow@gmail.com. At least we'll know if you're coming down and we will be prepared for you. All right, traders. Hey, we're into Thursday, baby. This has been some rough and tumble week, hasn't it? Keep those dukes up. Keep your stops in. And most important, keep your emotions out of trading. One of the best ways I can help you with that is to tell you to say the Steve Subs every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.